Okay, what is up, traders? What's up, tycoons? Super excited for today's video, coming at you with an update on ILV. This is Illuvium, and man, did we get a breakout and hit all of the bullish price targets that I gave you guys in the last video. So if you're not subscribed to the channel and watching my videos, make sure you do that so that way you can get constant updates on some of the bullish price targets and the bearish price targets and the different signals that you need to look at. So notice how we have these sets of 3 yellow lines right here. These are going to be the fib retracement levels using the Fibonacci tool over here. These are the 3 most common and most respected retracement levels, the 61.8, the 50%, and the 38.2. We'll go over how to use those, as well as the MACD and the RSI, and how you can use these to help predict and really understand future price action in the tokens that you're trading. So we'll jump straight into it, right? Please remember, none of this video is financial advice, rather just giving you guys information on the data on the charts and how to interpret this data so that you can give yourself an edge when it comes to trading, okay? You need to have an edge to be successful. Trading is like going to battle, it's like going to war. So the more weapons you have at your disposal and, knowing how to properly use those weapons is going to give you the edge that you need to increase your odds of success. So if you take a look, nothing moves in a straight line down or in a straight line up. What you do is you get a move up retracement in a continuation of that upwards trend, or a move down retracement continuation of that downwards trend, okay? Now, you can also spot reversals versus trend continuation when you move down, retrace, consolidate a little, and then break through those retracement levels. That's how you can spot a potential reversal to the upside, which is what we got at this point on the chart. So let me explain and show you guys what I really just went over. So you see we have this large move to the downside. We retrace up to the 38.2% retracement level, and we continue that trend and make a low, right? And then a lower low. So we come down, retrace, continue the trend. We were looking to see if we were going to do that again or if we were going to get a reversal, right? And so we have a new swing high now, and we take that down here to our low. We retrace up to the 50%, get rejected. But rather than continuing the trend, we held our support level here very, very well of 37,995, roughly $38. And you see, we ended up forming a double bottom here, and then we came up, consolidated a little, and then we broke through our retracement levels, headed to our overhead supply zone, and broke through it. Now, supply zones, this area in red, is essentially, it's just like resistance, but rather than using one specific line, okay, what you're doing is you're using a zone, okay? And you can see we have this period of consolidation right here. And this is where we find that we end up getting an imbalance of sell orders, an imbalance of supply that pushed the price down. We re-entered that zone and pushed the price back down again. So now we know that this is an area where there's been an imbalance of sell orders pushing the price lower. And so we need to be cautious in this area, as that can happen again. Now, these sell orders, there's not an infinite amount of sell orders there. So just like support and resistance, the more times you test a level, the more times you test a zone, the weaker it's going to get, right? And so we saw that we absorbed a lot of sell orders over here. We absorbed some more sell orders, and we really just pushed right through that supply zone and broke out and hit the bullish price targets to the upside that we gave in the last video. So that's our first tool, our first weapon that we're going to be using to really help us understand price action, is going to be these 3 major Fibonacci retracement levels. All right. Now, again, another thing you can use is going to be the MACD, and you can combine the MACD along with your relative strength index to help give you some ideas of what's going on. Now, the way you use the MACD is you look for entry and exit signals. So an exit is going to be the blue line crossing below, and an entry is going to be the blue line crossing above. If you see here, we got a MACD exit signal, and then we got a sharp move to the downside afterwards, right? Over here, we ended up getting a MACD entry signal, and we got a nice push up from 38 all the way up to 60, okay? Over here, we ended up getting another MACD entry signal, and it really ultimately led to this big, big rally that we were on. Now, previously in the video, we were right around here on the MACD, entering, getting close to entering up on our supply zone, and we had some question marks here. We weren't sure what it was going to do, right? I said, if we want to be bullish, we want to see it continue to head upwards in an upwards direction, and if we get a crossover, there's a chance that we could see some downside. Now, let's go into how you can combine these MACD signals with the RSI. This is going to be measuring the relative strength of a token at its given price level. So I have some circles highlighted here to help spot divergences for you. Okay, so what a divergence is when the price of the token is making a low here, and then we have a lower low here, and we have an equal low here. So clearly, the token is in a downtrend and it's moving lower in price. But if you look at this point on the relative strength index, we have a low, right? And at this point on the relative strength index, we have a higher low. So we have a low, we have a higher low. This is a term known as bullish divergence, when the price is making lower lows, but the relative strength index is making higher lows, and it's an indicator you may see some bullish activity. And we did get that nice pop from 38 up to above 60. And ultimately, we ended up pulling back as we were facing our major resistance levels of, from the retracement, all right, from the Fibonacci retracements. So it's always a good idea to, have some type of risk management and protect your trade if you are in a long position and it's coming up to your major retracement resistance levels. So that way you can, like I said, protect the trade and make sure you don't give back all of those profits. Okay, let's say you entered in around here off of the MACD entry signal combined with the bullish divergence, all right? And it came up and then we came all the way back down to the same price and you never took any profit along that way. Simply because you thought we would, just keep rallying. Now some people may close their position here, right? They may say, oh man, this thing went all the way back down to break even. What if it goes lower? I'm going to get out, right? And so these are some of the different ways and strategies you can use to really prevent that from happening to yourself. Now, what you want to look for is once you come up to these levels, again, you want to look for consolidation and you want to look for a break and a retest. So if you take a look over here, right, and let's just say we drag this over a little bit, all right, so we can truly understand what I mean here by the break and the retest to help spot the reversals. Okay, we came up, we consolidated a little, and look at what we did. We got a green candle, broke up, entered into our supply zone, came back down, and then we tested that 61.8% level as support. And look at what we did. We closed above it 2 days in a row, and then we pushed up higher. So great visualization of a reversal. Come up, consolidate, break, retest, and boom, right? So you can protect your trade when you're up here. And let's say your stop loss didn't get triggered, or let's say you missed this initial move because you missed the bullish divergence and you missed the MACD entry signals, right? Now, notice how we kept holding this bullish divergence trend line, all right? So, we bounced here, we bounced here, we bounced here, and each time we had a low, lower low, and then this was an equal low over here, right? But still from this original point where the bullish divergence started, this is a lower low. All right, so we held these. That's a good sign. If we would have broke this bullish divergence trend line, there was a chance that we could have broken our major support level here right around 38 and headed lower. But we didn't do that, right? So we got the good visualization of breaking the major retracement levels, consolidating, break and retest, pushing up higher. We were going to be cautious in our supply zone. As you can see, there was 2 days where we came up to these levels and fell back down, but we did a really good job of flipping our prior resistance to support and pushing past that supply zone and hitting the bullish price targets we gave very, very well. So now what we need to do, okay, is we need to know the major retracement support levels, right? So just as in this area, we were in downtrends, retracing, continuing that downtrend until we consolidated and broke past. We're clearly now in an uptrend, right? So we made a high, a higher high right here. We made a high, higher high right here. So in a much shorter term basis, right, versus like the long term in the past year, we are in a clear uptrend, right? We're making a high, higher high, higher high, making a low, higher low, higher low. So to continue this uptrend, what we're going to do is we're going to map out the 3 major retracement levels of support if we do get a pullback where we want to go, right? So we have the move up. If we retrace all the way down to 65.07, that's going to be our 61.8% retracement level. We're still in a healthy uptrend. Now, if we start to consolidate here and break through there, that's when we could potentially spot a reversal. Now, we haven't really broken past our major bullish price targets up here. So, if we do find support in our former supply zone, right, which also lines up with the 38.2 and the 50% retracement level, that's going to be roughly the major zone is going to be roughly about 82.73 all the way down to about 73 cents or $73. So what you want to do is you want to flip old resistance to new support, old supply into new demand, right? So we have this range right here. If we come down, we want to see us bounce in here in this range, maybe consolidate a little bit and push back up higher to retest our former bullish price targets of 92.3, 98.3, as well as 106. All right. So that's basically, the major levels that I'm going to be paying attention to here recently. This is kind of going to be no man's land right here. And we really want to see, are we going to break through the resistance, or are we going to come back down and test our prior resistance levels and flip them to new support? Even if we do break this demand zone here, we have the 61.8 at $65. That could be, a line in the sand for us when it comes to support. Now, let's take a look at the relative strength index. And what we can see is that we were also having a bearish divergence. And I went over how, on the MACD, we didn't know what it's going to do. We wanted to see it continue to curl up if we were bullish. And we had this bearish divergence trend line where we are making a high and then a higher high, right? We were making higher highs, but the RSI was making a high, a lower high, and a lower high. And I said, if we want to be bullish, we want to break out and retest this trend line and continue to head upwards. So we got the breakout. We're currently retesting it. If we fall below this trend line, that could be a bearish signal telling us that we're going to come back down and test our major retracement levels. The reason being is because this would be a look above and fail, okay, which is pretty bearish, or not like super bearish, but it's just a bearish indicator that, hey, you got a breakout, but that breakout failed, and it would be called a look above and fail. So we really want to see us continue to hold this trend line, maybe even consolidate a little bit and just ride it, and then ultimately head backwards in an upwards direction. But the RSI is well above 70. If you look, it's at 73.38 right now. 70 and above is the technical definition of overbought. So there is a chance we could see some pullback. So that's why we have our major support levels here, so that we know if we do get a pullback, these are going to be the main areas we want to watch for trend continuation, okay, or for trend reversal. Remember, how we showed, trend continuation over here, and we showed the trend reversals over here. So now you should have a pretty good understanding. We want to see the RSI continue to really hold this trend line right here and not really collapse down below, because if that happens, most likely we're going to see us come down and test some of our major levels here between 81, 73, and 65. So that's it for today's video. Hopefully you enjoyed this video. If you did, smash the like button and subscribe to the channel, and I'm out.